on the stock at this point. Vellayan Subbiah is Managing Director of Cholamandalam Investment and Finance, and he's joining us right now to take some questions on the back of the second quarter earnings that they reported. So thank you very much for your time. There's been an overall improvement this quarter for the company. Could you tell us if you'd be able to sustain this performance in the second half of this financial year?
Yeah, so that's a good question. It has been a strong quarter for us. The second half tends to be, a much better half for our industry in general. If we take, quarter-on-quarter comparisons, we might not sustain the same kinds of growth numbers because the second half of last year also began to get quite strong for us. But we definitely do see a very positive second half. We're very bullish on the second half of this year, and we do believe that performance will be very strong.
So vehicle lending has been quite strong. The AUM growth there is about 15% this quarter. Which segments within the auto space are you seeing the most traction?
Yeah, so definitely we see a lot of opportunity and growth on the vehicle side. Like you said, the overall growth has been good. Passenger vehicles continue to grow very well for us. That's cars and MUVs. That continues to be a huge growth area. In addition to that, we're seeing good growth on the tractor front. And most of our growth also is coming on the Shubh and the used front. The used vehicle market has been picking up a fair bit, and we've been gaining market share in that segment as well. So that combination has led to pretty strong growth in that segment. There are also segments that have been nascent for us in which we're growing, such as the two-wheeler segment, which is very small for us, but we're seeing good growth in that segment as well.
Is most of the demand that you're seeing on account of replacement? Replacement-led demand?
Through our customer base, I think that, it's obviously kind of a bit tough to estimate accurately. But if I had to estimate, I would say, still about half the market is being driven by replacement demand. And only kind of, the other half is coming due to fresh, requirements from customers. So there's still a fair amount of replacement demand, not as much as there was before.
Home equity too has seen a growth of 15%. Is there any LAP lending that the company undertakes, that's loans against property? Because we have heard about defaults increasing in the LAP segment.
Yeah, so definitely on the LAP side, the industry overall is seeing slightly elevated levels of stress. That's also reflected in our portfolio, though I would say that the amount of stress has been more mitigated in our portfolio than we've seen in others. We're fairly cognizant of that and are therefore taking a more cautious view to increasing our presence in that segment. But the industry growth is still allowing us to grow at the rates that you've seen from us in the last quarter. We're definitely getting tighter in terms of our lending in that segment today. To ensure that our focus is to bring back first, much better portfolio quality before we start increasing disbursement significantly again.
So talking about the overall gross NPA levels, it has improved year on year. What is your guidance going forward?
Yeah, so we don't really guide on GNPA. The good thing is, like you're seeing, it's improving. We believe broadly that trend will continue. We will continue to see better GNPAs going forward in the second half. We also have to see when we move to 120, from 120 down to the 3-month requirement in terms of the RBI mandate, which we will do ahead of RBI requirements. So that will again affect our GNPA reporting because that number will move up when we move to 90-day.
NIMs have been maintained around the 8% mark. What's the current cost of funds? Has it come down? And what's your guidance on the net interest margins?
Yeah, so NIMs definitely, our NIMs continue to be strong. And the good thing is that we've been able to maintain them at, the 8.4% levels. We're seeing two trends. We are seeing a drop in cost of funds, but we are seeing a commensurate drop in lending rates as well. The combination of the two is really helping us maintain our NIMs steady, and we do think that this as a trend will continue.
Okay, so we leave it at that. Thank you so much for joining in. Let's get into a very short break. For the markets, we're alternating between the red and the green line. mirroring what's happening across the European markets as well. So the CAC is just down close to about 0.1% as we speak. Numbers coming in from Thangamayil Jewelry. Net profits have declined by 4% year on year. That stock is weak, while Intellect Design Arena has lost some more as the net loss this quarter has widened to 13.5 crore.